Hello, and welcome to the Crypto Beat. My name is Kelvin Sparks. This is my co-host, Tim Copeland, head of growth at The Block. Joining us today, we have Ben Zhou, co-founder and CEO of Bybit. Welcome to the show. How are we all doing, guys?
Very good. Thank you. Thank you for having me on the show.
Yeah, and thank you for taking the time to join us today, Ben. So before we get started, our crypto IQ test is now closed, and the finalists will be competing for a shot at 20,000 USD. Be on the lookout via our official channels for more in the coming weeks. Now, let's get into today's episode on building Bybit with Ben. So for background context, Ben, you have built significant risk management systems. So I'm curious, in your own life, what's the biggest risk you've ever taken?
Wow. I think people take some risk all the time. Yeah. Life-changing decisions, getting married, having kids, starting a startup, especially in crypto. I think those are all critical choices and decisions that you look back, kind of end up where you are today. Yeah.
And so as you think about risk, like how do you weigh that against what the potential payout may be?
Well, I think if anyone is considering doing a startup, probably blockchain or crypto is the best industry because the risk to award ratio is very in favor of entrepreneurs, meaning that the industry is constantly growing. There are new opportunities, and I think especially for exchanges, kind of the track that we pick. You know, you do see exchange make mistakes here and there sometimes, but because the industry is growing, it tends to be quite forgiving. So, and again, the rewarding ratio is very high. So I think definitely is probably one of the best industry to start up. Yeah.
And so as you were building Bybit, what was the thought process behind building such a derivatives heavy exchange?
Well, I wouldn't say we're derivative heavy. It's just we started off as a derivative exchange. Back in the days, we started in 2017. And my previous background, I was running a forex exchange. So my background was really focused on derivative and margin trading. And then I obviously look at what choices we have, who are the exchanges offering this type of similar product. Back then, there was really BitMax was dominating with perpetual contract, and then there's only a few other handful exchange that they were providing the similar product. And after testing out the product, I felt like I could build a better product. So that's kind of with the genes and the background I had. That's how I started it. But now I think Bybit is really kind of spot everything, earn Bybit card. So people don't really look at us as a derivative exchange, but a kind of a whole overall kind of ecosystem.
Yeah, we're definitely seeing that with exchanges. This sort of seeming to offer everything these days. Sort of swathes of products, integrating this, that, and everything. Is it hard to kind of keep up with the zeitgeist? I know it's like launch pads one days, prediction markets these days. I mean, it seems like Coinbase is integrating prediction markets. Like, how do you keep up with all of it?
Yeah, I think everyone is moving into one direction. Is really you want to be the one-stop shop that keep clients' wealth or AUM. And the reason the exchanges are keep releasing new product is really to grab clients' tail from this new flow of new users. And the concept is once they come into your ecosystem or they have your app, whether it's the Bybit app or that other exchange, they can find pretty much everything they need. If they need earn product, if they need a crypto card, if so they don't end up leaving. And actually, you want to build a product is so comfortable and there are so many choices. It's can't be bothered to move. And actually, we will observe that most clients have the similar mentality. Is once the product has almost the things they need, they don't have incentive to move. And most clients actually don't compare prices and other things that a lot of people think is critical. To give you example, most people will still buy stock with their bank simply because the money is in the bank and they don't compare the price because typically you would buy it cheaper from Interactive broker or somewhere, but people are lazy to move, right? Yeah.
Yeah. And how important is like the card as a product? Because we've recently launched like ratings pages where I've reviewed I think nearly 30 cards across all different companies. And obviously there's a number of big exchanges who are going quite heavy into the card. Do you think that's a really sort of key loyalty driver?
Not only loyalty, it's becoming our new user acquisition, one of the best new user acquisition tool. Especially in countries that are very used to card, like EU, also Brazil, Argentina. Um, I think we've issued like over 3 million cards in the past 2 years. What we observed is a lot of clients would apply the card because we have so many benefits. We give like 10% cash back, and then for the balance, you're not spending, you earn like a yield. Um, and for us, it's really a user acquisition channel. And if you only look at the card business, it's probably a cost center. But if you analyze the overall client flow, the clients are being attracted to the card business, and if they do any other product consumption on the platform, you end up it's a positive ROI product. So it's really good for that. And also, by nature, the card is a very day-to-day use behavior. So that increase your client's behavior. They open up the app all the time. And we realized for the people who are using the card, because they open up the app to check like what cashback they have, what points they earn, they typically have incentive to make a trade or check out what we offer at the same time, whether it's Launchpad or Launchpool today. So it increased the activity a lot, because a lot of times when people think about crypto exchanges, they only open it up when they think there's something interesting from token, or there's a new token they want to understand. But if you combine it with a card or a daily kind of behavior, it increased their click point to the app, and that kind of increased business. So I think that's why the card is a very good product to launch.
So as you think about introducing new product lines, like what kind of validations do you look from either like the users or markets as to say this was a success, or no, this isn't something we want to pursue any further?
I think that's the same with any business, right? But the beauty of crypto is you can pretty much think of a product, writing it up, write a PRD, send it to developers, and then release test water, do great testing, A/B test within 3 months, and that's kind of the speed we have. So we always do A/B test. If let's say, I don't know, we recently launched RFQ, which is a product that clients can send RFQ doing arbitrage between options, spot and perp. And we just released it and give it to certain institutions and see how they like it, and see if there's any market feedback from our VIP clients, how is their feedback. So the opportunity cost for not launching is actually so high that you pretty much, whenever you have an idea, you want to build it and launch it and see how it works, because the industry is growing still so much. And I think, again, I always tell the team, the opportunity cost for not trying is the highest. So yeah.
Do you think you're going to get into prediction markets?
We're looking into it, and we're actually talking to a few big players. Obviously, everyone knows Polymarket, so we're talking to them, see what angles we can introduce, and also checking heavily on the compliance side. I'm not sure. That's one thing. One side I'm worried about is it legal? Is it compliant to do it? If it's if the the legal opinion is fine, then we can definitely try it. And yeah, I think some reason I think this 3 months, a lot more people has been asking me about prediction market, and my team is getting excited about it. So we're definitely looking into it. Yeah.
Okay. And what do you think of Coinbase getting into ICOs at this point of the market? So like, they bought Echo, they acquired Sona, but then they also it seems that they built their own ICO platform at the same time. And that's what's gone live with the Monad sale. What do you think? Because obviously you've got the Bybit Launchpad. What do you think about Coinbase getting into launchpads at this point in time?
Well, I think it's really trying to be first of all, Coinbase and Bybit are very different animal, and they are really predominantly US, and we don't touch the US. So we hardly ever compete. So in the market that we are in, we mostly see Binance. We don't really see Coinbase. So, but I do understand why they want to do this launchpad thing, because When a project wants to go global, they will typically give more preference or budget, whatever, to the international exchange. If they want to focus on US, they will give the budget to Coinbase and maybe do a dual listing, Coinbase, Binance, or Bybit. But I think by acquiring this ICO platform will give Coinbase a better edge to get better project that even have a global presence, and maybe from that way they can penetrate more from their global exchange. Maybe that's what they're trying to do. But honestly, we don't really see them where we are. Yeah.
So I was curious, Ben, you spoke to prediction markets and there's being a lot of interest on your team side of things. This obviously is a bit speculative, but in your opinion, if there's a sign too big to ignore, like, okay, obviously compliance, like it works out, hopefully, like, what would that sign in the market be that we need to jump into this right now?
Yeah, no, I think it wasn't a sign. If everyone is asking, we can definitely just launch a product and test it out, right? So I don't mind trying it. I'm not sure what my client would react, because people who are buying token and doing derivative trading or on Bybit existing platform might not be the prediction market clientele. I'm not sure. But again, I do think it's quite event driven now, the prediction market. So maybe it's good, especially when things like election comes. But again, I wouldn't mind trying. So yeah, we can see. Yeah.
Understood. So going back to, I guess, like the core business, or I guess what at least originally Bybit started with, which is derivatives, specifically perps. They've been booming all of 2025. I'm curious, do you see any differences between behaviors of on-chain perps traders versus centralized exchange perp traders?
Yeah, that's a good question. So I think, to be honest, the why DEX is, first of all, I don't see them as really a competition. Like I do see a place for DEXs, especially in the next few coming years, because everywhere is getting more regulated. For example, like all the global exchange, at least with high leverage trading exchanges, have to exit multiple markets. We're exiting Europe. We exited Japan. We exited Thailand, and so basically, with regulation comes, it typically gives you fiat and spot first. The derivative license will take some time. For EU, there is MiFID right now, which we're getting. With that license, you can offer up to 10 leverage. And I don't think for US there is a proper license to make retail to trade high leverage. So I think the existing of DEX is really for people who cannot trade high leverage. They lost the venue, and that's when they are moving into DEXs, right? To be honest, I don't believe people are moving to DEX because liquidity is better, because it's not, or the user experience is better, because they typically have to use a centralized exchange to do the on and off ramp, and then they have to move their tokens to the DEX. So, but I do see the gap will be closing if like derivative license start to become more popular, and then just like how CFD commodity markets are, when the license framework is ready, a lot of the existing user most likely will come back to centralized exchange because we're ready to able to offer them a compliant leverage product. Yeah, so that's my view. Yeah.
Understood. Thank you for illuminating. And I'm curious, since we've kind of talked about like the on-chain side of things, I really want to talk a little about like Mantle and ByReal. So what's the symbiotic relationship between Bybit and Mantle?
So Mantle is this project we kind of supported all the way since the very, I think, 4 years ago. Initially, Bybit committed half of our revenue to was BitDAO, to the BitDAO treasury. So if you look at today, Mantle still have one of the largest treasury on chain. Things like 2-3 billion existing treasury. And the initial goal was just to kind of use this DAO to deploy fundings to different projects. But eventually, this didn't work out because we figured there wasn't a correlation between how big the treasury is and the token price of BitDAO. So we're pumping money into the treasury, but the token is not moving. And so this assumption that the treasury is bigger, the token price will reflect that it was actually depacked. So then I think Mantle evolved gradually into Mantle from BitDAO, and then is focusing more on the layer 2. So now I think Mantle is really focusing want to be the RWA chain and using the exchange as the kind of the connector between the real world and then the token and then the on-chain part of Mantle. Yeah.
Understood. And I guess it seems like these things don't typically, like these disconnects that you spoke to, don't really exist in traditional markets. Why is crypto so wonky, even though it's having its coming of age moment right now?
Yeah, I think crypto is, at least for project, is not the pricing is not really determined by the treasury sides, right? There's many factors people are considering. I think uh, if the team is active, are they constantly building things? What is the utility of the token? I think the team didn't focus so much on utility of the token, but now I think in the last 6 months we have been focusing more on the utility. So Bybit is now again empowering Mantle by accepting Mantle token as the VIP tier, as the fee, as trading fees, as many things. And on top of that, I think there's going to be more utility coming into the token. So hopefully that will give some confidence on the price. Yeah.
So at the time when BitDAO was deploying funds into all these projects, why did you choose to really go heavy into the L2 route versus going against, like I said, making your own L1?
Yeah, I think, I'm not a decision maker in Mantle. So Mantle has always been running quite independently. But if I share my observation at the time, L2 was the biggest thing at the time, right? It was quite popular. Um, but people also say L2 is kind of nothing much happening here. And again, most people are focusing on L1 now. I don't look. I think project can evolve as long as the team is active, and Mantle team is definitely active. So they are looking into what is the future of L2 and versus L1, and even if we launch L1, for what reason we're launching? I mean, do we launch a high performance L1 like Hyperliquid and launch a DEX on it? Or do we keep it, but for now, the positioning of Mantle is really RWA. So keeping it on L2 on Ethereum is fine. We don't see any issues with that. Yeah.
Okay, what is Byreal?
But by real is really a project we incubated. So in Bybit, we tell our staff, if you have an idea, we will help you to build it. So it was really coming from one of my managers, and she loves the idea of DEX on Solana. And this is okay. Go ahead and do it. We'll give you support. So it's actually an independent project launched by one of our employees, and I think the project is doing quite well. I think the unique point is trying to make a real DEX with real liquidity, focusing on real projects. So meme is not gonna be able to get on by real, but projects that the team believe in. So again, this is something quite independent, but we're helping it. So hopefully this project will go well. But currently it is a DEX on Solana. It's doing quite well. Yeah.
Cool. And then sort of looking at the markets, with Bitcoin sort of back down to nearly 90K, what do you think of the current market dynamic?
If I'll be honest, I think we look at a few signals. We look at the liquidity. The liquidity on altcoin is really drying up. And I think we're gonna suffer a little bit, probably until next year, maybe March. Maybe things will pick up a little bit. But for the very short term, maybe the next 4 or 5 months, I don't think this is gonna get too excited because so much liquidity is lost. Post October 11th. What's kind of alarming is that at least from exchange perspective, the liquidity has not come back due to a number of reasons. But yeah, yeah, that's my take.
Yeah. And what's it like running an exchange sort of during this period? Because something I've sort of, been chatting about for a while is there seems to be in the space there hasn't been a real altcoin season, and a lot of the projects in this space are sort of funded through that. And I've always thought it seems like sort of the only profitable businesses are exchanges. So like, is that true, or is it actually, much more complicated than that?
I guess which part of your question you want me to focus? Is it the exchange part or the altcoin part? Yeah.
Exchanges.
Okay. I mean, exchange for sure do do make money still in a bear market, but the longer we are in the bear market, the problem is new users and existing users. You see less and less active users, and then there's no more new user coming in. So I think Bybit have went through maybe 3 bear markets, and each one is the same pattern. The moment we get lower and lower, and then in the end you really break even, and then maybe you got to start to do some layoffs. So I think the worst bear market for us we went through was after FTX crashed, and then when the market dumped. Literally the daily active user dropped to 20, I don't know, 15% of what at the peak time. And the exchanges we were really looking at, okay, with this daily trading volume, if it's below, we're really just making a loss, right? And that's why you see pretty much all the exchanges were cutting staff and cutting business lines. We did the same. So definitely, we don't want a bear market, right? Um, yeah, and when a bull market comes, that's when everyone is happy and clients making money, we're making money. So
Yeah. Man, I'm getting hit by the sun and now I'm massively overexposed. But it is what it is. Is it frustrating to have to continuously expand and contract? I don't know how much you guys have done this, but like, I know, with a lot of exchanges, you're hiring potentially like 1,000 people in a bull market, but then that's not sustainable in a bear market. And you're sort of continuously having to adjust rapidly to the market.
we did that in 2021. The reason is before 21, Bybit was a derivative exchange, and in early 2021, we decided to become this full ecosystem. So within that year, we hired to like 3,500 people from 600 people, I think. We were not hiring people, we were hiring companies. If you have a company that can help us, we would just join us, right? So, uh, but during that period, we built spot, we built fiat, we built the earn program, like all these other crazy stuff. And then there was so many changes required because before 21, exchanges are doing daily withdrawals twice. And now everyone is expecting within 5 seconds the withdrawal, right? So there were so many things you have to build and address. But again, with the 2023 crash or late 22 with FTX, and that's where we did our layoffs. We lay off to maybe 1,500 people. Ever since that, we've been, at least Bybit had been super careful in hiring. We always had very strict headcount approval process. Literally, every headcount needs to come to me, even if there's an extra admins hired. So ever since then, we have been growing very prudently. Today, I think after this bull market, we grow from 1,500 to about 2,000 people. So we haven't been expanding massively. So we're not doing any layoffs as well during this period. So I don't like this layoff. It was very painful to let people go, and yeah, it was hard. Yeah.
Understood. And I'm curious because relative to all the founders that we speak to, you definitely have an interesting perspective on like human resources and human capital. So how do you think about like, or what's your thought process when empowering people to say, okay, yes, this is a good idea. Now you should go and build it.
I think the fact if you have that mentality is already good. So what we've taught internally is I actually do all the trainings for the staff. Every single new staff, there is one session with me ever since the beginning of the company. So every single staff that's joining Bybit at least had one training session with me where I go over kind of the who we are, where we came from, where we're going. So that's my session called. And in that session, I always tell the staff, Bybit is this big ship we're trying to drive and provide value to the clients. And the value that we provide is provide access and opportunity for our clients, whether it's access to this new token, new market, or opportunity to make more and to gain more. And we have the responsibility to filter out the scams, right? And during this process, as we grow, we hope that our staff will grow along with us. And by the time they leave, um, whether they want to start their own business or join a new company, we hope that the Bybit logo stays on your resume that provides value. So this idea is, but Bybit is a place that you come and it's not for you to retire. Otherwise, you probably don't join us, right? The reason you want to join us is really want to build something. So we always encourage them to come up with new proposals and a solution to a problem that you face. And typically, the manager's role is just to give support. Okay, let's do it. So constantly, we are pushing people to actually to do the things rather than pushing people to I don't know, to do the daily jobs, to give new proposals. So that's kind of the idea. Yeah.
Yeah, thank you for sharing that. And I guess you spoke to like you sitting down and speaking with everyone at the vision, what the company is and where you guys are headed. I'm curious, in the early days, why spend your own money to bootstrap and only have like a small friends and family round when building such like a very, very big product?
Well, first of all, there's no one else to give money. It's not a choice. Only me and the founders believe this thing enough, and we were trying to ask around. It was hard. The challenge is all the investors were asking, why would you're trying to build something similar to BitMax, and why could you, a startup, build a better product than them who have all the monies and all the times already, right? But initially, we never imagined Bybit to be this complex. Initially, it was just a simple derivative perps product, maybe with 2 or 3 pairs, that fixed some smaller problem. I think the problem we were trying to fix was the overload problem of BitMax. So you start small, and then with the smaller problem, you gradually figure it out. You can solve a bigger problem by complex the product. So I think that's how we started. Yeah.
So then I guess as you think about maybe somebody who's a new founder, wants to bootstrap, or just has an idea generally, what advice would you give to them if they're super ambitious and don't have a lot of money?
Well, they probably want to start small. Actually, having money is probably a curse because if you manage to raise a lot of money, you lose focus. You can build. You imagine if you're someone who's starting out the exchange today, right? Money is never an issue, or money is not something that is extremely lacking in startups. Many startups can raise big money, and existing platform always have more money, more budget than you, right? So the angle to really build a startup and to kind of gain market share is to look at the problem and try to really solve the actual problem, then rely on budgeting and things like that. So, and it takes a lot of hard work and a lot of dedication to discover that solution to the problem. So, and a lot of it is nothing to do with money. So yeah, I think people don't. I think to me, for startups, don't focus too much on the money. It's really the problem. And if you can identify the real problem and offer a solution, I think the money part will come.
What would you say was the problem that you guys really found isolated and fixed in the market?
I think the early stage was again exchange were just overloading, and of course as a startup, from their perspective is that you don't have clients, so you don't have overload. You only have overload when you have crazy amount of clients. But now, if you look at the Bybit infrastructure, we do have a lot more clients, and we don't really have overload. So from a we designed the system in a way that it was scalable at the time, even from day one. We studied very hard on the other exchange and their infrastructure, and I think that was the first innovation that we did. The kind of second problem we faced was, how do we get users? Like, even if it's like you as a startup go out and tell the world you are faster than the other fastest car already been tested, and people wouldn't believe you because who are you and you have not been tested. So then the second part of the issue is, so how do we get users in? So the innovation that we did was how do we get users in? And we start to look at the influencer space, where the YouTubers and on the Twitter. And what we did very smart was we identified that at the time no one had a CRM to convert users. Everyone was just using a very simple link. and promote BitMax. So we provided this whole CRM solution, which offers a lot more data, which in return, we start to observe that after using the Bybit affiliate portal, our affiliates were able to change their behavior to their content to maximize commission. Previous to that, they were not a commission based. They were simply charging like $500 per promotion. And because of that, we produced a lot more full-time influencers that promote the exchange than anyone else. And so that kind of got the wheel flying. And then you have clients and they start to test the product. They say, oh, the product actually works. So that's initially how we kind of got started.
And then at this time, did you ever imagine that your company would get to the point where you could lose $1 billion and still survive?
No. Not in my wildest dream, no.
And then I guess I sort of have like one question about this, which I remember I asked sort of the same question to CZ, I think back in 2019, when he had a similar but smaller one. And I was just like, what was it like in that very moment when you found out about it? Like, what was your sort of emotional, where were you? What was your sort of emotional reaction at the time?
For me, I had no emotion because I realized emotion will just completely fuck me more. If I'm in that situation, I need to calm down and start acting rather than thinking about the consequence. So I was just reacting. Okay, what do we do now? We need to deal with our customer asking about this. We need to become transparent. We need to tell the world what's happening. And the only way to do it, to earn trust, is to be transparent. So that's kind of the decision I made within the 30 minutes after I found out we got hacked. And I think by the 40 minutes mark, I was on a live stream, which was totally against my PR, my lawyer's opinion. They were like, no, Ben, don't do that. Whatever you say could be held against you. But I need to be there because that's what people expect to see.
It's interesting. I think it actually did wonders, genuinely. Like I remember at the time, like I don't think we've ever seen that sort of transparency in quite a serious situation. And what people generally want is they want clarity. They want to know what's going on. It almost doesn't matter how bad it is, but if they know what's going on, they have certainty and can react accordingly. Yeah. Sort of what sort of time of day? Where were we? Just in the office?
No, it was clearly, I remember I got the call at 11:30 at night on a Friday night. One of the luckiest thing is I didn't drink that night. For some reason, I had meetings and I was just tired. I was like, okay, I'm not gonna do anything that night. So by 11:30, I got a call, and then so after that, I think we had this button to call all the pretty much wake up everyone and P-1 we call it is like the whole company wide call, and then it was like, okay, guys, I'm gonna head back to the office, set up the stream. We have a stream room. Set up the stream room. I'm gonna do a live stream. Yeah, so that's how it all happened.
Yeah, for CZ, I think it was he got woken up at 2 a.m. and jumped out of bed and swore a little and then was like, how do we fix this?
Yeah. So, but in retrospect, it was one of the most expensive lessons we have to pay. But we are now a lot more stronger. We are, especially in terms of the in terms of cold wallet infrastructure. We have our own infrastructure now. We're not using any third party, which is one of the reasons why we got hacked. And I think because of the way we handle it, we earn a lot more respect, and even from regulator, from peers. So far, most of actually we've gained more business. Bybit has outgrown the AUM at the time, and actually this year is going to be one of the best performance years we've ever done. So yeah, I think you look back, it's a hard lesson, but maybe a necessary one. Yeah.
How many days was it before you got any sleep?
I think 3 days. Yeah, and then I had some sleep.
Yeah, there's a point where you have to. Cool. And a couple of just jumping back to the market. Do you think the market has enough liquidity for these sort of big token launches like Monad, Mega ETH at this sort of point in time?
Yeah, I think for token launches, you always have the tension because everyone in the industry still look forward to some new token, new asset. But I'm just concerned that liquidity will gradually dry up. You had multiple major token release, but very soon we've seen 3 weeks after the liquidity started to drop, and then everyone move on to this new token, right? But that's the reality with any bear market. And I think for project, they just got to keep working on it to gradually earn people trust, and so they come back.
And are you concerned at all about what could happen with digital asset treasury companies if prices sort of kept falling?
There are some rumors about what strategy is doing, and then right, and then the Ethereum DAT. But first of all, what I'm not concerning, but what I do see is even among my friend circle that a lot of people were still looking at DATs, but they kind of stopped because the overall market just doesn't look good. And also, recent, I think SEC did start to take some actions on these type of, what do you call it, the DAT merger deals that might be problematic. So it's definitely not as welcoming as 6 months ago for this strategy, at least for new project. For existing ones, I think they've been through a few bear market. They should be fine, like strategy and these guys. But at least we have, to be honest, we haven't really seen so many successful ones, right? Although there's so many being launched. So yeah, that's kind of remains still to be tested.
Cool. And are there any things that you think are going to be big themes or trends into 2026? Like, how do you see next year shaping out?
I do hope next year is the year for RWAs. I do see a lot of regulator is focusing on that. We talked to the EU regulator. We talked to many regulators. Um, the general understanding is regulating crypto is not only for AML KYC reasons, is also for the economic benefit of the countries who don't have capital market. Especially for EU, crypto might bring a lot, the similar effect for capital markets in the US into this market. And also with RWAs, they can, increase access for different asset through on-chain rather than going through the traditional ways. So I think that might be exciting next year. And I hope we are working with a few even banks RWAs, I think UBS is the most recent one, and then a few more banks. I think this is getting real, and more liquidity is going to come in as well.
Are there any growth areas within RWAs that you personally are excited about?
So we are talking to a few actual exchanges, like Calibers, most people were excited about stock, tokenized stock, right? Um, but the current model kind of with Ondo and then X stock I think they have compliance issues because the underlying is who's actually holding it. It's kind of not super clear. And I think in order to be this thing to be adopted needs to be super clear. So maybe another model we're talking to the exchanges is the exchange themselves become the launching pad of this stock. So imagine Nasdaq become on-chain, right? And then there's a ledger or a specific chain that keeps the ledger of these ownerships. So wherever it's transferred, there's always the register. So the solution might be making the register on-chain as well, in parallel to the current offline model. So these are some things people are talking about, and if that's being realized, I think stock can very much be on-chain. And then, of course, I think money market funds and all these funds are already coming in strong with good liquidity. Yeah.
Understood. And even with, I guess, the debates on Twitter, maybe it was like a week or two ago around dividend stocks and perps funding rates, how do you think people are going to work through these issues? Because it seems like right now it's super difficult and nobody really has a solution yet for how these things are going to get paid out and tracked on chain in real time.
Yeah. So the problem is even with Ondo and Xstock, we have to do system overhaul. We have to actually change the way we recognize these pairs in order to recognize the dividends. But even the problem is even with that, the current liquidity of these pairs is just so low. No one is trading it. So the team for us is debating, do we do these type of changes? So hope that in the future, this token will become popular and everyone's trading it. But again, if we don't do it, we might miss out a huge opportunity. So in the end, we decided to, the team voted in to kind of making some adjustment on our existing infrastructure to cope with the dividend distribution. But at the same time, we're hoping there's a better model to do it, so that there's more liquidity comes in. Yeah.
Understood. Yeah, thank you, Ben. I think we're running a bit low on time, approaching the top of the hour, but yeah, really appreciate you for joining this episode. And as a reminder, our newsroom works tirelessly to get you accurate, informed crypto news. If you want to stay ahead, read the block. Thank you, and see you next time.
Thank you.